It's a beautiful and happy Friday from this part of the world. Good morning to you. So I would like us to confirm that we are good to go here. So what I would like us to do is to type in hi in the comment section if you can see my screen and you can hear my voice clearly. So let's see some hi in the comment section before we get this started. All right, if you can see my screen and you can hear my voice clearly, type in hi in the comment section. Okay, let's see what is happening here in the comment section. All right, okay, 587, good morning to you. 579, good morning. Okay, Lester 6241, good morning to you as well. I can see Lester also in the house. Hey Steamroller, good morning, glad to have you around. I see you, Carrie, as well. Good morning, Carrie. Thank you. It's a beautiful weekend, I guess so. Thank you. Steamroller wants us to do EURJPY. Well, I'm not sure that is going to be happening today, considering the number of pairs we having for this week. We had someone who added CADCHF to the speculations we are making for this week, and that might likely extend my time beyond the stipulated period. But if I'm able to finish before time, well, I will definitely put this into consideration. Okay. All right. So I'm so excited to welcome you to another promising session on the Extreme Speed. My name is Sheriff Daramola, and as usual, I will be taking you on a trading journey in the next 1 hour, where we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us today. Well, with that being said, let's dive into the charts and let's see what is really going on in the market right now. Before we go into the chat, we have a major event coming up today, a macroeconomic event coming up today in the form of let's see, I was able to spool that out yesterday, and we have the, hold on a second, okay, we have the publication from the Michigan Consumer Sentiment, which is coming up in I think 4 to 5 hours from now. And from the consensus we have here, there is some level of positivity for the dollar. And in fact, if you had noticed, in the last 24 hours, the dollar has dropped sporadically following the consumer price index, which was as expected and which was below the previous data for last month. But with the consumer sentiment index coming up later on today, with high hopes considering the consensus data here, we shall be looking at how participants in this market will be anticipating, reacting prior and post the event. So with that being said, we shall be diving right into the chart right now to see what is really going on in the market. And the first pair we are going to be looking at this morning is the USOil. And you know that since the beginning of the week, we have been profitable on the USOil after taking advantage of that buy position at the breakout of the channel here at around the $75, and that was on Wednesday. Remember, we had a couple of breakouts at the beginning of the week. Remember, we identified a channel between the $75 level here and the $74.50 area, where we said we are going to be looking out for either a breakout of the channel or breakdown of the channel to give us an opportunity to buy or sell the US oil. And in fact, on Monday we saw the breakout of that structure, which happened and gave us about 180 pips thereabout before the sell momentum came in. And remember, we took advantage of this move. Remember, on Monday I told you that if we start seeing selling pressure right around the $77 level, a very important structure that was broken during the course of last week trading session, we are going to be joining that decline to the downside. And in fact, we had this consolidation phase initially, and price broke down that support level of the channel had a $76.27 level to give us that opportunity to sell as well. Then we saw price come back into the channel where price had started the week, and we still held on to the expectation of a breakout of the $75 level, though we had a couple of breakouts of that structure before the final one happened here on Wednesday. And since Wednesday, price has continued to find higher highs, and in that regard we had multiple entries. We had structures identified during our live sessions, and we anticipated some breakout retest of the structures to give us opportunities to add more position to our existing trade, which we actually did. And we had 1, 2, 3, the third position was here. Then the breakout of the $78 level gave us the fourth position, and right now in the last 12 to 18 hours now, we have seen a situation where price has been finding buy pressure right above the $78.50 level. So for those who have been part of this trading journey since the beginning of the week, congratulations to you guys, as you will definitely be in over 1,000 pips in profit if we consider all the multiple entries we have here on the US oil. Now, as we head into the New York session today, we have some couple of structures here that we are going to be using to guide our trading activity for today. And one of the structure is the $79.30 level, which has been a selling niche for participants in this market since the New York session yesterday. As you can see, every time price comes into the $79.30 level, we have been witnessing selling pressure from that structure. And one thing about that level is the fact that that level has been negating set by pressure, so we need to take into consideration what happens if price action comes back into that level. And with the current situation we have here, as price retested the $78.50 level, broke out of that structure during the early hours of today, we are seeing price approaching that structure, and at this point we need to move our stop loss accordingly. If you are joined right from this level, move your stop loss accordingly. And I'm thinking that somewhere around the $78.50 level right above that structure seems most appropriate to lock in some profit here. And if you had been holding a position since the beginning of the week, we should be having somewhere around that area as well, around the $78.50 level, to lock in some profit at that point. Let's see how price action plays out from this current structure that we are in right now. So as we head into the New York session, all highs will be at the $79.30 level, as we want to see how price action will react to that structure one more time. And what we are going to be looking forward to here is, if price breaks out of the $79.30 level, then we shall be looking out for buying opportunity to join another wave of bullish momentum, which could likely break out of the $80 level to incite another form of bullish momentum. And remember how important the $80 level is on the daily time frame. If you are not part of our live session prior to this current one, I will be showing you something on the daily time frame so that you can see how important the $80 level is. But before we go into the daily time frame, let's quickly run through what our expectations is going to be like based on this current structure we have here on the 1 hour time frame. So like I said, if price breaks out of the $79.30 level with buy pressure around the structure or above that level on our lower time frame, then we want to be joining that bullish momentum to the upside. And if a further breakout of the $80 level happens, we will definitely be thinking of adding more position to our existing trade. However, if price action gets into the $79 level, $79.30 level, and instead of breaking out of that structure, we start seeing rejection of that level again, just as it has been in the last 24 hours here. As you can see, we saw that this level has been a strong selling niche. And again, we start seeing another wave of bearish another transition of selling pressure, giving us something like a reversal pattern, probably in the form of a double top, head and shoulder pattern, whatever reversal pattern that supports selling opportunities. Then we might likely be looking out for trading opportunities at that point. But for me here, looking at this current structure, it's going to be very it wouldn't be reasonable to sell from this $79.30 level at this point in time, considering the momentum we are in since the beginning of the week. So it's a bullish momentum, so we really need to see some breakout of a significant structure to determine that sellers are coming in at this point. And remember, today is the last trading day of the week. It's a Friday, and obviously it is peculiar with the market that prior to the last trading day of the week, if we have a huge move where participants will take advantage of this buy position right here, we'll definitely want to be doing some take profit activity. And take profit activities will be reflected on the chart as a retracement of that previous impulse leg that we had. So those who are taking advantage of that opportunity will want to make some money out of it, and what they will be doing is to sell this commodity to make some money, and this will be reflected on the chart as a retracement phase into somewhere probably around our golden zone area, which is always between the 50 and the 78.6% of the previous impulse leg, probably to start incite another wave of bullish momentum. And if you look at the current structure we have here, remember we have this bullish trend line which has been guiding bullish momentum since last week here. Price might likely retrace into the structure to incite another wave. So if we start seeing selling pressure right below the $79.30 level here, we might not be selling outrightly, but if you're someone who could take the risk, well, you can do some selling there with your stop loss right above the previous structure. Very tight stop loss right above the previous structure to protect your position, since we are in profit already. And if you can lose some 1% of your account size, considering what you had made so far for this week, it's a risk worth taking. But for me, I would advise that we want to see a significant breakdown of a structure, and we shall be looking at somewhere between the $78.50 level and the $78 area. So we want to be seeing a breakdown of the structure to give us an opportunity to sell if selling momentum comes in around the $79.30 level. So if price breaks down the $78 level stroke the $78.50 level with selling pressure coming in right below the structure on our lower time frame, then we might want to be joining the counter trend opportunity back into this trend line, which also shares a confluence with the $76 level here, probably with the intention of another wave of bullish momentum. But when price gets to that point, we will be deciding if we are going to be adding or we are going to be selling further if a breakdown of that level happens. So these are my views here on the US oil. So what I'm saying here is that for those who had missed out on this opportunity here or since the beginning of the week and you are not yet in this trade, or you are new to the session, well, I'm advising that we remain patient and wait out to see how price action will be reacting to the $79.30 level. So that will now determine if we are going to be buying or adding more position to our existing trade, or we are going to be selling if price breaks down the $78.50 level. And if you want to be selling here, I said you could have a tight stop loss. If we start seeing selling pressure around that area, it's a risk worth taking so that you can join the sell momentum early enough and ride the move all the way down. And if price breaks down, retest the structure, you could be adding more position to the existing trade. So that is that on the US oil, and I promised earlier that I will be showing you how important the $80 level is on the daily time frame. And remember, for buy positions for this week, this is where our take profit target is at this point, considering the nature of the key level there on the higher time frame. So in that regard, we shall be scaling up into the daily time frame here, where I will be sharing with you how important that structure is, considering the market structure we identified on the higher time frame. So this is what we have here on the daily time frame, which we explained in details during the first session of this week. And one thing we observe here, first of all, is the fact that price action has been on a bearish momentum since the month of June. And in that regard, we were able to connect the series of lower highs here, which gave us that resultant bearish trend line you can see on your screen, further emphasizing the strength of the sellers at this point. However, when we zoom into what has been happening here in the last 3 to 4 months, we have noticed that price action was initially caught within a consolidation phase within a channel, that is the $93.50 level, which was serving as a resistance point of the channel. And then we have the support level of the channel sitting at the $75 level here. As you can see, price has been caught within this channel since September stroke the last day of November, giving us a clue that there is an indecision in that market, and a breakout or breakdown of that channel will be giving us a sign of where price is likely going to be going. And during the first day of the month of December, we saw a sharp rejection of that $80 level with selling pressure. And if you look to as far back as the last day of November here, we saw how that level also was holding selling pressure. You can see that engulfing candle bringing price into that demand zone. Then we saw another one start at the beginning of the month of December. That was last month, which led to a final breakdown of the $75 level. And price breaking down a significant structure like that $75 level, which has been serving as a demand zone, taking out all the buy position there, was a good sign that there is a tendency that sellers might likely come in at this point. And with the breakdown of that structure, we can see how price action came back to do a retest of the $80 level. So price action closed at the $80 level last year. And at the beginning of this year, we saw how price rejected the $80 area, as you can see there. Then we saw this engulfing candle bringing price to break down the $75 level the second time in a month. And that was a good signal that sellers might likely come in at that point. But one thing that made us not to continue to look forward to selling momentum is the fact that as soon as price got into the $73 level here, we saw buy pressure come in. And what this simply means is that price was unable to break the previous low. This was the previous low, and that's even the lowest point price has ever been in the last 6 months, and that is the $70 level. Despite the second breakdown of the $75 level here, we can see price was unable to break the previous low as buy pressure came in at that point, giving us a consolidation phase. And that was what we identified last week, and we were looking out for either a breakdown or a breakout of that channel to give us an opportunity to buy. But lo and behold, price broke out of that structure, giving us a buy position, which we took advantage of at the beginning of the week, right around the $75 level, and we have continued to ride that move all the way up. Now look at this. So now price is approaching the $80 level one more time, a level which has been a strong selling niche for participants in this market in the past. You can see what we have here. That level has been a strong selling niche, and this is what I was trying to explain to you on the 1 hour time frame of how important the key level at the $80 level is. So that is why we're having our take profit target at that point. And if you look closely, you can see that the key level here also shares a confluence with that bearish trend line that we identified earlier. So because of this, now we need to be patient and see how price action is going to be reacting to both the bearish trend line and the $80 level to decide if we are going to be joining or adding more position to our existing trade, or we might be getting ready to join a decline to the downside. So to add more position to our existing trade, we want to see a breakout of both the trend line and the $80 level, giving us buying pressure around the structure to probably incite another wave of bullish momentum. However, if we start seeing selling pressure below the structure at the $80 level here, transitioning into a reversal pattern on our lower time frame. A breakdown retest to structure dropping back below the bearish trend line could be a sign that our trend line is still very strong to hold selling momentum, and we shall be getting ready to join that decline to the downside if that is going to be what will be happening. So at this point in time, we shall remain patient, like I said, on the 1 hour time frame. Place our TP target somewhere around the $80 level, and then let's see how far this is going to go. And if price breaks out, then we want to be thinking of adding more position. But if price rejects that structure, then we will definitely be thinking of selling the US oil. So going back to our 1 hour time frame and considering what we said on the daily time frame here, we'll definitely hold on and see how price action will react. So now we have said, for those who had been part of this trade since the beginning of the week, or probably you took it right above the $78.50 level this morning, well, move your stop loss, lock in some profit. And for those who had missed out on this one, let's wait and see this current structure we have here. As you can see, we have a selling niche around the $79.30 level. Let's see how price will react to that structure. If a breakout retest happens in our lower time frame, then we want to be joining that rally to the upside. But at this point, I will still retain my $80 area. You can extend it to around the $81 level. At this point, I'm not sure, but you can still extend it out to that point. And as soon as price gets into the $80 level here, move your stop loss accordingly, lock in some profit, and if a breakout happens, then we should be glad to add more position to our existing trade here on the US oil. So if you have any questions regarding what I just explained so far, feel free to drop your inquiries in the comment section, and I will be taking the next 10 to 15 seconds to read through the chat and see if there are any questions before I move on to the next pair. Okay, so what do we have here? We have 785414. Good morning. Madam, good morning. Joplin, CG92, good morning to you. All right, I think that is all. Well, so in the absence of no questions, I guess we will just move on to the next option. And the next option we are going to be looking at this morning is the US tech. And let's do a replay of what our expectation was during the live session yesterday. And if we look at the current structure we have here on the 1 hour time frame, remember we have been profitable on the US tech since the beginning of the week. Remember, we took advantage of this buy position. So the week started at around the 11,050, where we identified a beautiful channel here, where price initially started the week with a consolidation phase, emphasizing some indecision in the market at a particular point in time. And whenever we have a channel like this, what we look out for is either a breakdown or a breakout of the channel to give us a signal of where price will be going. And in fact, we had an initial position here on Monday following the live session. So the New York session, that day, we had this breakout of that structure, which gave us about let's see, about 200 pips thereabout. I think I remember vividly to give us about 200 pips. Yes, we had about 200 pips on this one before the sell momentum began here. And following that, we had the sell momentum bring price back into the channel where it started. Then we continue to see our 10 body buyers to climb above that 11,100 level again. And lucky enough for us, we were able to take advantage of that move right on Tuesday here. During the later part of the New York session, price retested our structure, and we saw a situation where price continued to find higher highs and higher lows. And one thing we also did to guide our trading activity for this week is to identify a bullish trend line after connecting the series of higher lows here. So when we did that, we had this bullish trend line, and what we said is that we shall be using that trend line to guide our trading activity. So we had multiple entries on the US tech. We had another position running on Wednesday here. Then during the live session yesterday, we were at this point where I told you that we should be looking forward to either a breakout of the 11,400 to give us an opportunity to add more position. And if selling pressure, the selling pressure we noticed here during the live session continues, we might likely see a situation where price comes back into the $11,300 level, which also shares a confluence with that bullish trend line to incite another wave of bullish momentum. And this is exactly what happened here. Though we had a sporadic move in price action following the CPI yesterday, it was so rapid that I had to get out of my trade for like 2 hours. And one thing we saw is that as soon as price got into the 11,300, we saw sharp rejection initially. Then the second candle here showed us some level of buy pressure coming in at this point. And when we scale down to a lower time frame, we begin to see some reversal pattern evolving around that area, which gave us a leverage to join that rally to the upside. And in fact, we had that opportunity and price action moved significantly well in our favor. And for those who are taking advantage of this move from this point, kudos to you for being on standby to catch this move, as you would have taken about 200 pips before the sell pressure began at 11,500. And talking about the 11,500, that is a very important key level we also identified on the daily time frame. I will be showing you that in a moment after discussing what the structure is saying here on the 1 hour time frame. So we can see here, as soon as price tested the $11,500 level here during the New York session yesterday, we saw selling pressure coming from that point. And remember, that was where our TP target for the week was. And as soon as price got into the TP target here, we started seeing selling pressure come in from that level. Price came back into the 11,400, a structure which was holding selling pressure before. We saw buy pressure above that structure, giving us a sign that buyers are likely going to be taking price again from that structure. So we had a position running at this point during the early hours of today. I hope you were able to take advantage of that move, but if you didn't take it, it's okay. But if you did, congrats for being on standby to catch that move. So I will be advising you to move your stop loss to break even at this point. And the reason why I will be saying that you should move your stop loss is simply because of the sell pressure we have been witnessing here since the New York session yesterday. So we don't know how far the sell pressure will go. Will price break out of the structure, or will the sell pressure lead to a situation where price breaks down the $11,400 level, a level which also shares a confluence with that bullish trend line that has been holding buy pressure since the beginning of the week. So if a breakdown of the 11,400 level happens, breaking down that bullish trend line, then at this point we want to be seeing this as a bearish signal. And if this is followed by selling pressure below the structure on our lower time frame, we want to be getting ready to join that decline to the downside. And with the selling pressure identified below the 11,500, on the daily time frame, this 11,500 level is a key level that was broken during the course of last week. So let's, for the sake of clarity, so that we can be on the same page here, I would like to scale up to the daily time frame so that we can see what I'm talking about here. So when we scale up to the daily time frame, we actually discussed this during our previous live session here. We talked about how we identified a bearish momentum here since the beginning of last year, and as a result of that, we had this bearish trend line figured out after connecting the series of lower highs here. And things got a little bit interesting later on in the year. That was in the month of June, as we saw that as soon as price got into the $11,000 level here, we started seeing buy pressure come in, negating all attempt by the sellers to break down that structure. The same thing happened here also in the month of October. We saw buy pressure coming at this level, but selling pressure around 11,700 negated those pressure there, pushing price further to the downside, now having a new demand zone sitting around the 10,600. Now, talking about that demand zone here, the $11,000 level, you can see that since the month of June, we have been witnessing buy pressure come in from that structure. So this is why we identify the $11,000 level as a key level we shall be using to guide trading activities for this year. So that's the $11,000 level there, and that is the first structure we were using to guide trading activity for this year. And one thing we saw that made us to buy the US tech at the beginning of the week was the fact that following this bearish impulsive move to the downside, After hitting the demand zone, we saw a little consolidation phase around that area, which lasted about a week, hereby transitioning price action into something that looks like a reversal pattern. And whenever we have a reversal pattern like this, the next thing we want to be doing, whenever we have a double bottom structure, which is a strong reversal pattern from a technical standpoint, the next thing we want to be doing is to identify a neckline for that structure. And in fact, it was so coincidental that the neckline area shares a confluence with that $11,000 level, which has been a strong demand zone for participants in the market in the past. And with a breakout of that $11,000 level, it was a good sign that that reversal pattern is now mature for us to be buying the US tech, and we are lucky enough to catch that move at the beginning of the week, and we rode it all the way into the 11,500 where our take profit target was hit. And now you can see how important the 11,500 is. This is what I wanted to show you on the 1 hour time frame. So following the breakout of the 11,700 here in the month of November, we saw our price was caught within a huge channel here between the 12,100, which was the resistant level of the channel, and the support level of the channel here at the 11,500. Now, during the mid-month of December, we saw the final breakdown of the 11,500, which was a good signal that sellers are getting stronger, are still very strong in this market. And from a technical standpoint, whenever we have a breakdown of a structure like this, a very important structure like this, we are expecting that at a point in time price is likely going to come back into that structure to retest it, probably to incite another wave of bearish momentum. And as you can see here in the last 20 to 24 hours now, price action has been rejecting the 11,500. Remember, I showed you that on the 1 hour time frame we've been seeing sudden pressure from that structure. So at this point in time, we need to be very, very careful. You would agree that we are at a critical point in the market right now, as price action continues to exhibit some selling pressure right below that level. So what we are going to be doing, like I said, on the lower time frame is to remain patient. So like I said, if we start seeing selling pressure around the structure and it breaks down the structure we identify on the 1 hour time frame, we will be going back to the 1 hour time frame in a moment. But if price breaks down that structure, we will definitely be looking out for a bearish momentum. And remember, we have this reversal pattern here, the double bottom structure, price breaking out of that structure also. So if price breaks out of that structure, as that's done, and we start seeing selling pressure here, there is a likelihood that price will come back to do some retest of that $11,000 level that was broken during the early days of this week, probably to incite another wave of bullish momentum. So we are going to be monitoring what is really going to happen around the 11,500 level here to determine what our next line of action will be. And if price breaks out of the $11,500 level during the New York session today, then definitely we would be thinking of buying if we start seeing buy pressure around this area on our lower time frame. And if buy pressure comes in there, well, at this point I will suggest that we have our TP target around the 11,700. Remember, that is also a key level also that has been witnessing selling pressure in the past, and if you look closely into the structure, it shares a confluence with that bearish trend line we identified earlier that has been holding selling pressure since the beginning of last year. So we might likely see a situation where price comes back into the 11,700 if a breakout of the 11,500 happen. And at this point, when it gets here, we don't know what's going to happen yet until price action gives us a clue of what is going on. So we might see a situation where price drops back to the downside, or a breakout of the structure could incite another wave of bullish momentum for this year. So let's see what happens afterwards. So at this point in time, we are at around the 11,500. So we shall be scaling back down to our lower time frame to look at the structure here to decide what our next line of action will be. So going back to the 1 hour time frame here, this is what we have now. We are on the 1 hour time frame. And remember, the 11,500 we identified on the daily time frame. This is it right here. And as you can see, we have been witnessing selling pressure from that structure. and if the bullish momentum from this level is unable to break the previous structure and price action continues in such a way that it breaks down the 11,400, a level which also shares a confluence with that bullish trend line that has been holding bullish momentum since the beginning of the week, then this is likely going to be a bearish signal where selling pressure below the structure in our lower time frame will be giving us an opportunity to sell. And you can see what I explained to you on the 1 hour on the daily time frame. You can see that it shares some level of alignment with our current structure, supporting a bearish momentum, and that will only happen if we have a breakdown of both this bullish trend line and the $11,400 level. However, if price continues to the upside here, breaking out of the 11,500, and then we start seeing buy pressure right here on our lower time frame, then we want to be adding more position to our existing trade. That is, if you are already in this buy position, and if you are not yet in the buy position, then it will be a good opportunity to join that potential rally after price breaks out of the 11,500. And if that happens, we should be having our take profit target somewhere around the 11,650 and the 11,750 area, which I showed you on the daily time frame, which shares a confluence with that bearish trend line that has been guiding bearish momentum since last year. So these are my views here on the US tech for today. If you have any questions, feel free to drop your inquiries in the comment section as usual, and I will definitely be checking from time to time to see if there are any questions that need my attention. So moving on, we're going to be talking about the USDJPY, and in fact the USDJPY is our trade trade for the last 24 hours here, as we were able to take over 240 pips in profit as price moved as expected. So how the price started this week, it started at around the 132.250 level. It was on a bearish note. The week started on a bearish note. We saw this is where price started the week. So we had the resistant level for the week, had the 132.250. Then we also had a support level for the week sitting around the 131.500, and we had a beautiful channel around there, which gave us a pattern to use to guide our trading activity. And whenever we have a pattern like this, you know, we always look out for either a breakout of the channel or a breakdown of the channel to give us an opportunity to either buy or sell. And at the beginning of the week, we initially had the breakout of that structure. We bought at this point, but price took us out of that position at break even. Then when we fast forward to Tuesday here, we saw another buy opportunity around this level as price action broke out of the 132.250. Breakout retest of that structure, we bought as well, moved our stop loss accordingly, and in fact we were taken out of that position one more time. So during the live session yesterday, we were around this point. I think we were around here we were around the 131 level during the live session yesterday. Remember, we were already in a sell position after we cited the breakdown retest of the 132.580, which also shares a confluence with this temporary bullish trend line we identified on Tuesday's live session. We said if price breaks down, retest the structure, we want to be joining that decline to the downside, and in fact price moved significantly well. It moved about, let's see, about 150 pips move as price edged into the 131 level, which I said was a major key level on our daily time frame, and we actually said we are going to be using that structure to guide our trading activity for the year. And during the live session yesterday, we mentioned the fact that we have two scenarios we are going to be looking forward to as we anticipate the CPI. And we said if we start seeing buy pressure above this level in a situation on our lower time frame breakout retest, we want to be joining the rally to the upside. And if instead a breakdown retest of that structure happens, it will be a good opportunity to sell. And the latter is what happened here, as we saw price action break down the 131.00 level, a very good opportunity for us to join that decline to the downside, and we did. And I hope you are part of this trading journey. For those who are taking advantage of that move right there, well done to you guys for being on standby to catch that move when it happened. We also had a situation here during the later part of the New York session. I think I shared this on my public platform as well, as we saw another breakdown retest of the structure at the 129.500, giving us another beautiful opportunity to join that decline to the downside. And in fact, price moved significantly well, and it gave us about 100 pips thereabout. So if you had joined both of this position right here, kudos to you, as you will definitely be in profit at this point. So with the current situation we have here, and if you have been part of this profitable journey, the next thing we want to be doing is to lock in some profit, as we don't want to lose out on any of the profit we had made so far. So what we are going to be doing right now is to move our stop loss accordingly, and at this point I will be suggesting somewhere right above the 129.00 level, as we have a structure here to move our stop loss to, hereby giving some room for price action to breed, with the hopes that price will be continuing to the downside again. So with this information we have here right now, and for those who had missed out on these opportunities, let's see if the market will be presenting us with another chance to either add more position to our existing trade or join outrightly, or we might be looking out for a reversal pattern coming in from this point in time. So what we are going to be doing now is to scale back into the daily time frame. Let's look at this structure from a technical standpoint. Let's have an holistic view of what is really going on in this market. Then we shall be coming back to the lower time frame to make a decision. And in addition to that, I would like to share with you how important the 131 level is for those who had missed out on our earlier session, so that you can see what I'm talking about, and at the same time we can all be on the same page. So now going into the daily time frame here, I will scale up into the daily time frame, and this is the daily time frame here. So let's zoom out a little bit, and this is the structure we had identified at the beginning of the year. And if you look at the structure critically well, you will notice how the 131 level has been a major determinant of price action, at least in the last 6 to 7 months now. Look at what happened here in the month of May. We saw how that level was holding selling pressure at one point in time, as you can see here. Then in the month of June, we saw the breakout of that structure by the buyers, and since price broke out the structure here in the month of June, we have seen a situation where price has continued to trade above this level to emphasize the strength of the buyers at this point. You can see how this level, attempt by the sellers to break down the structure, was met with strong resistance from the buyers. It happened here in the month of June. In the month of August, again, we saw attempt by the sellers to break down that 131 level. Buy pressure came in. The same thing happened here also in the month of December, and at the beginning of the year, remember, we took advantage of this buy position which gave us about 850 pips move as we rode it all the way into the structure. So as a result of this, we were able to call this our demand zone, and at the same time we used it as a key level to guide our trading activity. And one thing we said at the beginning of the week is that as long as price remain above the 131.00 level, we'll continue to look out for buy position at this point. But if the sell pressure we have been noticing since the beginning of the week will continue, as it has respected that bearish trend line you can see on your screen here, that has been guiding selling momentum since the month of October last year, and it happens in such a way that price breaks down the 131 level, then it will be a good opportunity for us to sell. And look at what happened here in the last 24 hours. Price action has finally broken down the 131 level to incite that bearish momentum is gradually coming in at this point. So with the breakdown of the 131 level, we have a situation where price has taken out all the buy position here, and this might likely give some liquidity to sellers to push price further to the downside at this point. So right now we are at the 128.100 level here, as price action is sitting right around the structure, and at this point we need to understand what is really going on in this market. So since a breakdown of the 131 level happens from that trend line, and the next thing we'll be expecting is that whenever we have a breakdown of structure, we all know that we should definitely at one point in time see price come back to do a retest of structure, which also shares a confluence with that bearish trend line in anticipation of another wave of bearish momentum to the downside. So when will this happen? We don't know. But if at any point in time during the New York session today, we have a structure, price action evolves into a structure that will be giving us probably a double bottom structure here, we might likely see a counter trend opportunity that might bring price back into the structure with the anticipation of another wave of bearish momentum. And the other thing we could also see here is if at this point in time we see something like a trend continuation pattern, which could likely come in the form of a probably bearish rectangular pattern for the sake of clarity, breakdown retest, then we could join that decline to the downside as well. And if you look at the structure here from the weekly time frame, you will remember that we identified a couple of bullish trend line here after taking into consideration price actions activity since 2021. And you can see here, this is the first major bullish trend line we initially identified at the beginning of the year after connecting the series of higher lows, and this is what we have here. So we might likely see a situation where this breakdown of the 131 level will bring price into this bullish trend line, probably to incite another wave of bullish momentum, or it could lead to a breakdown retest of the structure to incite a wave of bearish momentum at this point. So we shall remain patient here and look out for the structures, and in this regard we will be scaling back to our lower time frame. Let's see what is happening around the 128.100 level. Let's identify that level, and then we shall be using it to guide our trading activity for today. So right now we are back at the 1 hour time frame, and the next thing we want to be doing is to identify the 128.100 level, which we identified earlier on the daily time frame, and this is what we have here. So we have the 128.100 level sitting somewhere around here, so we shall be doing some relabeling, and I will readjust this price to 128.100. So let me place it at the bottom right hand side. All right, so this is where we are right now. So in the last 12-15 hours now, price has been within the 129.500 level and the 128.100 area. So for those who had missed out on the sell opportunity we have been enjoying in the last 24 hours here, well, we have two situations we are going to be looking out for going into the New York session today. Now, the first one is, since we already had a breakdown of the 129.500, we might likely see a situation where the buy pressure we have been noticing here in the last 4 hours will extend further into the structure at the 129.500. And if we start seeing selling pressure below the structure here on our lower time frame, it could be a 5 minutes, 10 minutes time frame. Look out for a double top structure, head and shoulder pattern, rising wedge, whatever it is, breakdown retest of structure. We could join the decline to the downside. And if a further breakdown of the 128.100 level happens here, then we will be adding more position to our existing trade. So that is one scenario we are going to be looking out for selling opportunities here. Then the other possible scenario that could happen is if price do an outright breakdown of the 128.100. This will be a good situation for us to add more position to our existing trade. And if you are not yet in this trade at all, then it will be an opportunity to sell from that level. And that is that on that one. Now, in as much as we are looking out for selling pressure here, we should also take into consideration that buyers could likely come in from this point. And considering the fact that we have a macroeconomic event coming up in 2-3 hours from now, that is the consumer sentiment index, we might likely have a surprise happen where the dollar might try to do some recovery. And if we are going to be seeing some recovery here, then we want to be seeing price break out of the 129.500. So the 129.500 will also be a yardstick for bullish opportunity here. So if price action breaks out of the 129.500, we might see a situation where price comes back to do a retest of the 131 level in anticipation of another wave of bearish momentum. Or if a breakout of the 131 level happens, a retest of structure should be giving us an opportunity to add more position to our existing trade. So these are the scenarios we shall be looking forward to on the USDJPY for today. If you have any questions, feel free to drop your inquiries in the comment section below. So I will be moving on to the next pair here. I'm already running out of time. So let's quickly run through the last two pairs within the next 10 minutes. So the next pair we are going to be looking at is the commodity XAUUSD, and on the XAUUSD we have been enjoying some buy position here since Wednesday. We had this buy position taken at above the $1,876 level here, and price action has continued to find higher highs and higher lows. However, following the CPI yesterday, we had a sporadic move which took us out of our buy position, and at that point, whenever we have this kind of situation here, I normally step aside from the market, allowing this volatility to calm down, to settle down, for me to now think of what next my line of action will be. And during the early hours of today, after stepping out of the market for a while, I saw some consolidation phase around the 1,900 and the 1,895. And with that kind of situation here, you all know what we look out for when we see a flat channel like this. The next thing we want to be doing is to look out for a signal in the form of either a breakout or a breakdown of the channel to give us an opportunity to either buy or sell. And I shared this on my public platform this morning, where I said if a breakout of that level happens, we want to be buying, and if a breakdown happens, we want to be selling. And lo and behold, we saw the breakout of the 1,900 a couple of hours ago, giving us an opportunity to buy as the buy stop order was triggered, and price action moved over 850 pips move before we started witnessing selling pressure from that structure at around the $1,910 level. And since price got into the structure, we saw the sharp rejection. Price action has continued to find lower highs here if we look at it from the lower time frame. So at this point, if you took advantage of this move here, kudos to you for being on standby to catch that move. But the next thing we want to be doing right now is to lock in some profits somewhere around the $1,902 level. Lock in some profit here and see how far this is going to go. So with a breakout of the structure here, and for those who had missed out on this opportunity, well, I would advise you to remain patient here, and let's see if price action will do a retest of the 1,900. You know, from a technical standpoint, whenever we have a breakout of a structure like this, we expect that one point in time price will come back, do some retest of structure to incite another wave of bullish momentum. So if that happens, that price comes back and we start seeing something like a double bottom structure, reversal pattern on our lower time frame around this level, then we want to be joining that rally to the upside from that point. However, if price continues to the upside and then go to the downside here, and instead it continues in such a way that it breaks out of the $1,910 level here, then this will be a good opportunity for us to add more position to our existing trade. And if you are not yet in this trade, it will be an opportunity for us to join that potential rally to the upside. However, even as much as we are looking out for buying opportunity on the XAUUSD, it's important we also take into consideration that a selling momentum could come in here in such a way that this breakout of the 1,900 could turn out to be a false breakout. So if that happens and we start seeing a situation where price action drops to the downside, breaking down the $1,900 level here with selling pressure coming in right below the structure on our lower time frame, then definitely we want to be getting ready to join that decline to the downside, and a further breakdown of the 1,895 level should be giving us a leverage to add more position to our existing trade on the XAUUSD. So these are my views here on the XAUUSD. So I hope we'll be on standby to catch this move when they finally happen. And one thing I would like to say here is, for those who are already in this trade, kindly move your stop loss accordingly. Lock in some profit here, as you know we are anticipating a major event, and this could cause some level of volatility in the market, taking us out of this position. And if we are going to be taken out, we don't want to be taken out in a loss on this one. So let's prepare ourselves, let's position ourselves in such a way that we can catch those moves when they finally happen. Now I will be moving on because of time to the next pair that we are going to be treating today, and that is the GBPUSD. And on the GBPUSD here also, we have a similar situation with what we had on the XAUUSD yesterday, as since the beginning of the week we had a situation where price has been finding lower highs, and as a result of that we had this bearish trend line figured out. Though we have been enjoying some bearish momentum on the GBPUSD since the beginning of the week, but it wasn't that much compared to all other pairs we have been trading all along. And one thing you will notice about this is that in the 72 hours from the beginning of the week, we saw our price was caught within a choppy situation, emphasizing some indecision, and it also shows that participants are anticipating the major event, the CPI that came up yesterday. And in fact, following the CPI, we saw some volatility in the market, which made me step aside from this market as we were taken out of the buy position we were in yesterday with some small profit, and we stepped aside and waited for some time to see what happens afterwards. But during the early hours of today, we noticed our price action was caught within this channel. We had a buy position running here. I don't know if you took it. If you took it, kudos to you for being on standby to catch it. And if you had done that, please move your stop loss to break even at this point. And the reason why I'm saying we move our stop loss to break even is simply because of this. I'll be showing you that in a moment. Hold on a second. So now see what we have here on the 1 hour time frame. We have a situation where we have been witnessing selling pressure since the New York session at around the 1.22350 level. Look at what happened here. Look at the nature of the wicks of those candles around that area. We saw how sharp those rejections are at that point, giving us a clue that there is a tendency of selling pressure coming in from that point. So we need to be very wary of what is happening here. Even though we are taking advantage of this breakout of both the trend line here and the 1.22100 level, we want to remain patient and see how price action will react to this 1.22350 level in the next couple of hours to decide what our next line of action will be. So to buy the GBPUSD, if you are not yet in this trade, well, I will tell us to hold on a second and wait out for a breakout retest of the structure on our lower time frame and look out for buying opportunity above this level to join this rally to the upside. And if you're already in this trade already, you want to be moving your stop loss accordingly. And if you are already in this trade already, you want to be adding more position at the breakout of the 1.22350 level. Now for selling opportunities here, I wouldn't be selling unless I see price break down the 1.21850. So this is what I'll be looking forward to for selling opportunities. So I'll be looking out for a breakdown of the 1.21850 level in order to sell the GBPUSD for today. So let's see how price action plays out in the next couple of hours. So these are my views here on the GBPUSD. If you have any questions, feel free to drop your commentaries in the comment section of this video you are watching right now. And let me quickly take the last one, the CADCHF we treated yesterday, and this is what we have here. I will just do so. We're already taking out of the position here again as we started seeing selling pressure come in around the 0.69730 level. And if you look at the current structure we have here, remember during the live session yesterday we had a beautiful channel between the 0.69300, which was the support level of the channel here, and then we had the resistance level of the channel around the 0.69500 level. And we saw the breakout a couple of times, which took us out at break even, and the same thing happened this morning. A breakout of that structure was a good opportunity to buy, and price action appeared to have taken us out of that current position again. So it has been break even since yesterday on this CADCHF. So at this point, I wouldn't be advising us to buy unless price breaks out of the 0.69730 level. And the reason why I'm saying that we shouldn't be buying unless a breakout of the structure happens is simply because of how this level has been a strong selling niche in the last 24 hours. So you can see that every attempt by the buyers to break out of the 0.69730 level has been met with strong resistance from the sellers. So if we are going to be buying this, we want to see an outright breakout of the structure, taking out all the sell positions here, gain some liquidity from that, then we look out for buying pressure above this level, then we could join the rally to the upside from that point. However, if price does not go that far and instead it continues to drop to the downside from that level, then we might not have any choice than to join a decline at the breakdown of the 0.69300 to join that retracement phase. Remember, this is an impulsive move that broke out of the 0.69300 level. During the course of the week, we saw the breakout of that structure, so we might likely see a situation where price will drop into the 0.6900 level here to incite another wave of bullish momentum to the upside. So this is what we shall be looking forward to. So let's remain patient here and wait out for breakout of structures to confirm our expectations on the CADCHF for today. So with that being said, I would want to drop the curtain here. I can see Steamroller saying something here. It says, I know you won't get time to do EURJPY, but I'm looking for confirmation that I have identified a inverted head and shoulder pattern on 4 hours time frame. Perhaps we can incorporate it next week. Okay, all right. I will try and do something next week on the EURJPY. It's okay. Then I'll say good morning to you. Are the winners? I don't know what you're talking about there. What's the name of the application, software, or website you use for this analysis? I seriously need one urgently. Okay, I use TradingView. I use TradingView Post Pro. That's what I use for my analysis. All right. So before we drop the curtain today, let's quickly do a review of what our expectations are for today. So the first commodity we looked at today is the US oil. And on the US oil, remember, we have been profitable since the beginning of the week, and price action has continued to find higher highs since we entered this trade at the breakout of the $75 level at the beginning of the week. And we had multiple entries. We had 1, 2, 3, 4, and 5 here, and before now we were looking out for a breakout of the $79.30 level, which has already happened. So if you are taking advantage of that move right now, kudos to you for being on standby to catch that move as it happened. And for those who are joining currently, you will want to be moving your TP target to somewhere around between the $80 and the $81.500 level. Let's see what happens around the $80 area. So like I said, we are going to be waiting to see what happens. As soon as price tests the $80 level, you want to be moving your stop loss accordingly to lock in some profit. And if a breakout of the $80 level happens, this will be giving us an opportunity to add more position to our existing trade. However, if selling pressure comes in from that structure, then we want to be joining that decline to the downside. So these are the views we talked about today on the US oil. Then another thing I made mention here on the US oil is the fact that this bullish trend line which we identified here, which has been guiding bullish momentum since last week. Remember, we identified this bullish trend line. So we said if price breaks down the $78.50 level at the $78 area here, that is, if price takes us out of the buy position in such a way that it leads into the breakdown of the structures here, followed by selling pressure below that structure, we might likely want to join that counter trend opportunity down into this level here at the $76 area, which also shares a confluence with that bullish trend line we identified earlier, which might incite another wave of bullish momentum. But if you are not a counter trend trader, well, you might want to abandon this if price breaks down to $78.50 level and wait for price action at this bus stop here at the $76 level here around this bullish trend line here for another wave of bullish momentum. So that is what we are going to be looking forward to on the US oil for today. Then we went on to talk about the US tech, and on the US tech we are also profitable on the US tech since the beginning of the week. In fact, we had 2 or 3 positions running here. We took advantage of this breakout of the $11,100 level on Monday. Remember, we took advantage of this, which gave us about 200 pips before the sell momentum began here, bringing us back into the channel we identified at the beginning of the week. And we also had another position again here. We had another position here, and then yesterday also we had another position at this point. And if you remember vividly what we said on this prior to this present session, we identified this bullish trend line, which we said we shall be using to guide our trading activity. And as long as price remains above this bullish trend line, we will continue to look out for buying opportunity. And if price breaks down the trend line, we will be getting ready to join a decline to the downside. And one thing we observed here in the last 24 hours is the fact that price has been finding selling pressure right up below the 11,500. and I was able to show you how important the 11,500 level is on our daily time frame. And we said that level, if selling pressure continues below that structure, it might lead into a situation where price breaks down the bullish trend line to the downside, a level which also shares a confluence with that 11,400 level. And if that happens, we want to be looking out for selling opportunities or below the structure to join that decline to the downside. However, if price continues to the upside in such a way that it breaks out of the $11,500 level here, we look out for buying opportunities above the structure with a TP target adjusted to somewhere around the $11,650 and $11,750 level. So this is what we are going to be looking forward to on the US tech. Then we went on to talk about the USDJPY, which has given us about 250 pips in the last 24 hours here. And remember, we took advantage of this move, this bearish momentum here on, I think on Wednesday. We sold at the breakdown retest of this temporary bullish trend line, which also shares a confluence with the 132.580. So we sold the move all the way down, and we continue to add more position to our existing trade. So we had a position here, and during the New York session yesterday, we had another position here. Then we had another one here, and price has continued to drop to the downside at this point. And for those who had been part of this trade, we had moved our stop loss accordingly, locked in some profit here. And for those who are not yet in this trade, we have identified a possible scenario where we want to be looking out for trading opportunity for today. And what we said is that, one, we want to see if the buy pressure here, which has been negating this 128.100 level in the last 4 to 5 hours now, if this move brings back price back into the 129.500, and this leads to another selling pressure. And if we scale down to a lower time frame, like a 10-15 minutes time frame, you see a reversal pattern there, then a breakdown retest of structure should be giving us an opportunity to join that decline to the downside. And if a further breakdown of the 128.100 happens, it will be giving us an opportunity to add more position to our existing trade. Now, I also said if price does not go that far, that is, if price does not climb to the upside, but instead breaks down the 128.100, it will be a good opportunity to join that decline to the downside from that point. Then that is what we are looking for selling opportunities here. And I also made mention of the fact that despite the fact we are looking out for selling opportunities on the USDJPY, we should not ignore the possibilities that buyers could likely come in. Remember, we have a major macroeconomic event coming up today. That's the consumer sentiment index, which could likely bring some liquidity or give some value to the dollar, and this might likely evolve into a reversal pattern that will take price out of the structure to the upside. So we want to prepare ourselves in such a way that we can be part of this trade when it happens. So what I'm saying here is, if we are going to be buying the USDJPY, we want to see an outright breakout of the 129.500, and if this happens, followed by buying pressure above the structure on our lower time frame, it will be a good opportunity for us to join that rally to the upside. And if the rally continues to the upside, as soon as price gets into that key level that we identified on the daily time frame here at the 131.00 level, we want to be moving our stop loss accordingly to lock in some profit, as we want to see how price action will react to that structure. Remember, the structure was broken here during the New York session yesterday, and there is a likelihood that if price comes back here, we could be seeing selling pressure start again to do a retest of structure to incite this trend continuation to the downside. So we want to be very careful. As soon as price gets into that level, we move our stop loss accordingly to lock in some profit. And if a breakout of the structure happens, followed by buying pressure right above this level on our lower time frame, we want to be adding more position to our existing trade. So that is that on the USDJPY. Then we went on to take on the XAUUSD, that is the gold. And in fact, we had a beautiful situation here on the gold too as well. Though we've been buying the gold since Wednesday on this platform, we've been buying gold, But during the course of New York session yesterday, following the CPI, we saw this sporadic volatility move that happened in the market. So I had to step aside from the market for the market to settle down for us to make a decision. And during the early hours of today, we were able to see a consolidation phase between the $1,900 level and the $1,895 area. So we had the support level of the channel here, the resistance level of the channel at this point. And whenever we have this kind of structure, it is our culture here in this community to look out for either a breakout or a breakdown of this channel to give us an opportunity to either buy or sell. And in fact, we saw the breakout of the 1,900 during the early hours of today, which gave us an opportunity to buy. And if you had bought at this point, congrats, as you will currently be running with about 500 pips in profit at this point. So if you have been part of this one, I told you to move your stop loss accordingly, somewhere around the 1,902 to lock in some profit here, as we continue to see selling pressure come in at the 1,910 level. And from a technical standpoint, whenever we have a breakout of a structure like this, there is a likelihood that price will come back to do a retest of the structure to incite another wave of bullish momentum. So we are looking forward to price coming back to the $1,900 level to give us an opportunity to add more position to this trade. If that happens, we want to get ready to join. And if price does not go that far and instead it climbs above the $1,910 level here, we look out for adding more position above the structure. Now, in as much as we are looking out for buying opportunities here, we shouldn't ignore what happens if price drops below the 1,900. So if price drops below the 1,900, I want to be seeing this as a sell opportunity if sell pressure continue below the structure. And with the further breakdown of the 1,895, we'll anticipate another position to the existing trade. Then we moved on to talk about the GBPUSD. I think that was the last pair for today, and we had a buy position running at this point. But one peculiar thing about the structure here is the fact that price has been caught within a consolidation phase in the last 12 hours. Now price has been caught within the resistance level here at the 1.22350 and the 1.21850 level, which is the support level of this channel. And it's our culture here, whenever we have this kind of channel, we want to see an outright breakout or breakdown of the channel to give us an opportunity to either buy or sell. So for us at this point in time, and for those who had bought above the 1.2210 level here, I have told you to move your stop loss to break even, as anything could happen considering the selling pressure we have been witnessing from this level since yesterday. And in anticipation of the consumer sentiment index also, there is a tendency that surprises could come in at this point. So I have said if price breaks down the 1.21850 level, I want to be looking out for selling opportunities to join that decline to the downside. And if we have a breakout of the 1.22350 level, then we look out for buying opportunity on the GBPUSD. So it's a very simple setup we have here. So I implore us to be on standby to catch these moves when they finally happen. So on this note, I want to call it a day here. It has been a wonderful moment, and thank you for your attention. I really do appreciate every single one of you for being around till this moment. And always remember that we don't want to get too excited whenever we have a breakout of a structure. Immediately a breakout of a structure happens on your 1 hour time frame, you want to be scaling down to the lower time frame, like a 10, 5, 3 minutes time frame, to look out for retest of structure supporting where price action is heading. And if this happens, you want to get ready to see that as a confirmation to join whatever direction price action is signaling to us. So it's better you take a trade that suits your expectation, that suits the position, that suits the structure, rather than taking a trade out of the fear of missing out, and you take a trade and you lose money. It's better you take a trade that has a high chance of giving you some profit than just take a trade because of the fear of missing out based on impulses. So whenever a breakout of structure happens, wait out for a retest of structure in a lower time frame so that you can join that potential rally or decline, as the case may be. So thank you very much for being around. I really wish you best of luck during the New York session today, and I wish you a merry and happy weekend as well. Do have a wonderful evening. Bye bye.